Three stocks I'm buying May 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month, where I share with you three stocks that I'm planning on buying in the upcoming month. The upcoming month in this situation is May 2019. And by the way, let me just say it's a good feeling to actually have three stocks that made the list. Basically, the past couple months, I think we had one stock make it once, then we had two stocks. So we haven't even had three stocks for a while, but these three stocks are very interesting. And one of them, I think you guys are going to have a pretty good idea of what this particular stock is, and I definitely want to add more shares of. And the other two stocks are also very interesting as well. So I hope you guys enjoy this, me kind of going in depth on these companies. Generally, when I'm thinking about buying a company, I'm thinking about years out. Doesn't mean I'll always hold a stock for years out, but at least that's the plan going in. And by the way, like, always do your own due diligence, always do your own research. Don't just buy a company because somebody on the internet's buying a company, guys. So anyways, hope you enjoy this as always. And I want to let you know that link down there in the description is my Becoming Master of the Stock Market course that is on sale right now for 70% off. That sale is supposed to end, I believe it's on May 1st. So you have a few days left to kind of get that course. That goes into everything I look for in a stock, how to actually buy stocks, how to go about doing it, has dividend investing mastery section in it. It's an unbelievable course for an unbelievable value, guys. So make sure you get that before May 1st. All right, let's get into this. Alrighty, guys, first stock up here of the three is a company named Zillow Corporation, ticker symbol Z. I do not have any shares in this stock as of right now. This company has around a $7.5 billion market cap on it. The share price is around $36 a share as of right now. And Zillow, I'm really interested in this one. By the way, if I bought this one, which I'm planning on doing this upcoming month, this will be my most speculative company I own, okay? But Zillow essentially has a monopoly on the real estate apps and websites that most people use around the United States and Europe. And they're in an unbelievable position. You think of Zillow, you think of Trulia, you think of realestate.com, StreetEasy. A lot of these different platforms are all owned by Zillow, okay? There's really only one main competitor to them, and it's Redfin, okay? Redfin is really their only competition out there. Other than that, they almost have like a monopoly on all the apps and websites that you and I actually use when we go to look at homes or go to, buy a home or go to rent a home or something like that, guys. So I love the fact that they don't have a massive amount of competition, okay? Last quarter, they grew revenues by 29%. Very strong growing company right now, just across the board on many of their different business segments. And that's expected to continue. They're expected to have at least 20% plus revenue growth expected for at least the next 2 years, which is phenomenal because the growth is not slowing with this one anytime soon, at least a 20% plus clip. It's a very fast growing company, okay? And that's not expected to end, all right? Very strong balance sheet with this company. They have about a 3-to-1 ratio of cash and investments versus their debts. That's something I pay attention to all the time when I'm kind of looking at a balance sheet and kind of understanding a valuation of a company. Very strong balance sheet, and that's an extra good thing because there's a company spending lots of money right now, and this is a company that on the bottom line, they are losing money. They are taking a net loss right now, and they're expected to continue to take losses for at least probably the next 2 years, all right? So at least on a yearly basis, maybe every once in a while on a good quarter, they can actually have a profit, a positive net income, but in terms of a yearly basis, this year we're in right now, 2019 and 2020, they should have net losses, okay? They should just get a little smaller and a little smaller. But needless to say, that's why a great balance sheet is very important with a business like this, because they have a huge opportunity in front of themselves. In my opinion, the opportunity in front of Zillow long term, if you look out at a 5-year span, a 7-year span, I think this company can become the buyer's agent and the seller's agent and the loan company and basically the entire home buying process or home renting process. In my opinion, all the paperwork, everything, all electronically done, will go through Zillow in the future. In my personal opinion, I think that's where this company is going on a long-term basis. I just think that's where we're going, okay? Where we go more and more online with everything, even things like banking, right? Everything we're doing more and more online. I think the home buying process and home renting process in the future is going to 100% go through the Zillow app specifically, and you're going to be able to do everything, make offers on homes. You're going to be able to actually buy the home. Sellers can accept or reject offers, things like that. All the paperwork, I think it's all going to be done through Zillow if you look at this on a long-term basis. I think that's where this company's going, and if they do that, we're talking about a company that has $100 billion plus opportunity in front of them in terms of market cap. And you look at this company right now at a $7.5 billion, and it's like this could have a massive opportunity in front of this company as long as they execute. And the co-founder of the company is now remains the CEO now. He basically came in February. I think that's a great thing. I think he's going to be part of the reason they can drive to this over time. time, okay? So anyways, that covers Zillow. That's the first stock. Like I said, that's the most speculative of the three, but you know, I plan on buying that one, and that will be my new spec stock, guys. So let's get into number 2. Alrighty, guys, coming into stock number 2 is a stock I've been buying on and off for about the last year or so, and I absolutely love this stock, okay? This company is named Callaway, ticker symbol ELI. It's a $17 stock, $1.6 billion market cap, 15 forward P on this company. I'm going to take you through some slides that are really going to show how impressive this business has turned around over the past several years, okay? This is a golf business at the end of the day and also a clothing business, okay? Now let's get ready to see these slides, all right? So this kind of shows you the different brands that Callaway actually owns, okay? They obviously own the Callaway brand, which is kind of the premier brand when it comes to golfing, if you're buying golf clubs, golf balls, things like that. Odyssey, they own OGO, they own Travis Matthews, which is a phenomenal brand for clothing, especially more higher end type clothing in the active lifestyle space. They just acquired Jack Wolfskin, which has a huge business out in Europe as well as China, okay? So this kind of shows you their golf club business. Now, the only thing I worry about here is if you do look at the US market share, it has been increasing for Callaway. They've been taking market share from everybody for several years, and that's a great sign. However, we do notice the US market share did slip a bit in 2018 down to 26.5% from 29%, so that's a bad sign there that it did fall. However, if you look at it historically, their business is still up massively. Now we'll have to see where they can get to as far as market share goes in 2019. I'm hoping they can get back to somewhere around that 29% level or so. We'll have to see how all that shakes out. If you look at the golf club business overall, as far as net sales, this was a business doing, you know, a little over 550 million just a few years ago. Now we're over $700 million on this business. And the more impressive thing is if you look at operating profit, this was a company that was doing operating profit with their golf club business, you know, a little over 40 million. Now we're over $100 million of operating profit with the golf club business, all right? Then if we look at the golf ball business, this might be even much more impressive, okay? If you look at their US market share of the golf ball business, look at how that has increased. It's over doubled up since 2013. 2013, they had 7.9% of the US market share for golf balls sold. And now you fast forward to 2018, they just did 16.3% of the US market share for golf balls. That's an extremely impressive number there, okay? So needless to say, their business is increasing dramatically on the golf ball side. Not only that, look at the operating profit slide, okay? Operating profit, this was a business that used to lose them a lot of money. Look at the numbers in 2013, dramatically bad. Then they kind of get around break-even levels in 2014, and nowadays, you know, it's you know, approaching $30 million of operating profit from their golf ball side of their business. So that's phenomenal news for Callaway, because you got to think about the golf ball business as a business that a lot of people, you know, replace more often than, let's say, golf clubs. Like somebody might buy a new, like an actual golfer might buy new golf clubs like what, every 5 years, maybe every 10 years, whereas golf balls, people lose those all the time in the lake and stuff like that. Like you always, if you're an actual golfer who goes and plays every week or every 2 weeks or something like that, like you're always buying new golf balls pretty much on an every month basis, okay? Now, if we look at the numbers here a little further out, we just kind of like, you know, you kind of look at the overviews of these kind of businesses. Revenue in 2012 for this business was $774 million. This past year, they did over $1.2 billion. That's a very nice growth, okay? Market share for U.S. hard goods went from 14% to 24%. Gross margins went from 34.1% in 2012 to 46.5%. It's a massive, massive increase in gross margins there. Operating margin obviously went from a very negative number in 2012, negative 8.2%, to now a 10.6% positive number. Adjusted EBITDA went from negative 6.9% to positive 12.5%, and EPS went from a huge loss of 77 cents in 2012 to this past year they made $1.07 of positive earnings per share. So needless to say, their business has fundamentally transformed over the last several years into a business that was losing money, that just looked like it was gone and to be forgotten, to a business that is growing very nicely now and is putting up very nice numbers, whether you look at the gross margins, whether you look at the revenue, whether you look at the EPS. It doesn't really matter what you look at. It's all in just a much better shape, okay? Now, that's not the only reasons I'm kind of bullish, the fact that this business has turned around, but also we got to look at something, okay? Baby boomers are now starting to retire in mass. Not only that, but the baby boomers who maybe can't retire, a lot of them are going to start going to more like part-time jobs and start working working less. So what this basically does is this is a great news for golf, because what a lot of retirees do, they love to play golf, okay? If you know, my second home was Sun City, West Arizona, just for the mere fact that that's where my parents had businesses, and in Sun City, West Arizona is a retirement community. And what do retirees love to do? They love to play golf, okay? So the baby boomer generation, the fact that they're starting to retire now, that's a great thing for the game of golf, okay? Not only that, but then Mr. Tiger Woods is back on tour, and he is playing great. You know, a year ago or so when I first started buying the stock, I mentioned that I think Tiger Woods was going to come on a comeback, and sure enough, he did, okay? A lot of people laughed at me at the time. He just won the Masters, the biggest golf tournament in the world, the Super Bowl of golf tournaments, okay? So needless to say, Tiger Woods coming back and playing great, it's literally just a huge thing for the game of golf. I mean, you could look at like Justin Bieber was like doing Instagram posts about Tiger Woods, okay? The President of the United States was doing posts on Twitter and whatnot about Tiger Woods, okay? The former President Barack Obama was doing posts about Tiger Woods. Like, it's hard to even like fathom how big of a superstar Tiger Woods is and how much he means to the game of golf. So that just inspires the next generation to get playing, okay? And then on top of that, they have a nice investment, about a little under a 15% ownership stake in a company named Topgolf, which builds these unbelievably locations basically that are like driving ranges on steroids. It's so such a cool experience. They have 52 locations globally right now. They're adding around 8 to 10 locations in the US per year, 14 additional sites planned and announced, including 3 international sites, okay? So that's very interesting, and we don't know what the valuation is on Topgolf now. No, I've seen estimates around Topgolf's valuation in the billions of dollars, so you can run the numbers and say around a 15% ownership stake for Callaway. Like, imagine what that is worth for, if they sell out of that position down the road, they can probably get $500 million or so for that investment, which then they could just pay off debt like overnight basically on their balance sheet or whatever, or just acquire another business or something like that. But needless to say, that business is growing phenomenal, and that's helping Callaway at the end of the day just get a bigger and bigger valuation. So that's phenomenal news. That's why I love Eli. That's why I'll more than likely be buying this one. More shares in May of 2019. Let's get into stock number 3. Alrighty guys, stock number 3. Some of you guys may have already guessed it. I'm not going to spend a ton of time on this one because I feel like I talk about this stock way too much as it is, but it is Tesla Corporation. I should be buying more shares of Tesla, okay? Let me just put it as simple as possible why I'm super bullish on Tesla, why I believe I'll make a lot of money on Tesla over the coming years, okay? First is 2019 is going to be more than likely the first positive net income year for Tesla. They've had positive net income the last few quarters. Overall, for the total year in 2019, Tesla should have a positive net income, which is massive for the company because they have not done that yet. And just getting to a place where they actually have a positive net income is huge for the company, okay? And in my opinion, they shouldn't ever turn back. They should have, all future years in the future, they should be positive net income. Elon Musk has mentioned that many times, okay? They're the dominant player in electric vehicles in terms of market share you want to look at, which is phenomenal because guess what? All of vehicles in the future are going electric. So the fact that they're so far in front of everybody with the dominant market share in electric vehicles is great for the business. And as that business continues to increase and electric vehicles become, more and more popular and people just start buying electric vehicles, Tesla should remain the number one. And even if they lose some market share here and there to some competitors, they should still remain number one, okay? They're also, in my opinion, the leader in self-driving. I've looked at what everybody else is doing in self-driving, and I just cannot see any way that Tesla does not win the first to level 5 self-driving. From seeing exactly what Tesla has literally on the road right now is mind-blowing, okay? Never mind that, all the mass amounts of data the company's able to collect from everybody that's, driving their cars on autopilot, that's phenomenal for the company. So they should be a leader in self-driving. Their brand is absolutely loved. People absolutely love the Tesla brand, what it represents to the world. The CEO is absolutely loved by everybody except short sellers and people on Wall Street, essentially. That's really the only people who don't like Elon Musk. Almost everybody else absolutely loves Elon Musk, what he represents to the world. And, people, kind of put him on a pedestal above pretty much any other CEO in the world. And that's saying a lot, okay? So the CEO is absolutely loved, and on social media, he's very active, especially on Twitter. People love Elon Musk. other than short sellers and other than Wall Street people, okay? The Reno Gigafactory, you know, is at a place now where it's pretty much built out the way Tesla needs it built out. They can, you know, continue to expand that in the future, but as of right now, they really don't need to put any more money really in the Gigafactory out in Reno until they really need more capacity. But that thing's a monster, okay? It's one of the biggest buildings in the world. I think it actually, or I think it's when it's completed, it'll be the biggest building in the world. But needless to say, like, that is phenomenal. It's built out what they need for right now, okay? So that's good. Shanghai factory should open in late 2019. That thing is going up super fast. It is unbelievable, okay? And when that opens, Tesla's gonna have a massive advantage in a huge market of China and just Asia in general, okay? That's gonna be so big for Tesla. By the way, that probably won't be their only Asian factory. I wouldn't be surprised if in a few more years, they build another factory somewhere in Asia, maybe another part of China, or maybe just somewhere else in Asia in general, because I don't think Tesla Shanghai is gonna be able to, you know, basically produce all the Teslas needed to be produced in that market over the next 5-10 years, okay? Maybe the first few years, but long term, I don't think it's gonna be big enough, okay? Solar roofs, this is a business that's completely like forgotten about because Tesla's been so focused on Model 3 production, ramping that and things around that. That solar business, I think, is still has a huge potential when you kind of think about, you know, how you know, collecting all the energy from your roof, that going into your garage, that being able to give you energy throughout your house, and then actually, you know, being able to charge your car up, which is probably going to be a Tesla or electric vehicle of some kind. That's huge for the Tesla business. And then robo-taxis, this is a little further out. This is a little, you know, it's several years out, but robo-taxi network is something that could get Tesla to a valuation in the hundreds of billions of dollars rather than, you know, 40-50 billion dollars like it has now. Robo-taxis alone is a market that should be worth hundreds of billions of dollars down the road. So needless to say, very bullish on Tesla. I think we'll do phenomenal in that position long term, and I plan to continue to buy some more shares in May of 2019. Let me know if you guys are buying any of these 3 stocks. If you've bought any of these 3 stocks, I would love to hear from you guys in that comment section. As always, make sure you smash that thumbs up button. Thank you for watching. Have a great day.